It is time for a little money, power, politics. The Labor Department published new numbers on U.S. wholesale prices today. And spoiler, they are much higher than expected. The PPI surged nearly 1% last month. That is the biggest monthly jump in over 3 years. Now, if you are not familiar with this measure, what it is, what it means, why do we care? Well, PPI stands for Producer Price Index. That means the wholesale price of goods. We care because it provides unique insight into the real inflation picture that's coming ahead. Now, the CPI, the Consumer Price Index, that is something we hear a lot more about. It's basically the standard measure for inflation, and it usually lags PPI. So based on today's higher than expected PPI numbers, that means in the next few months, there is a very, very good chance inflation will spike significantly as those producers pass those increased wholesale prices onto you and me, consumers, which is precisely what Goldman Sachs laid out in their economic forecast that we all saw a few days ago, just before President Trump called on Goldman's CEO to fire the bank's economists. Do you remember why? For a bad read on inflation. All right, let's bring in Brooke Masters, U.S. Managing Editor for the Financial Times. And Barry Ritholtz is back with us, co-founder, chairman, and chief investment officer of Ritholtz Wealth Management and host of the Masters in Business podcast on Bloomberg Radio. Madame Masters, let's start with you. What is your take on these numbers? Because PPI is not something your average viewer, listener, consumer out there, voter pays attention to.
I think it's probably an early warning shot, and it's going to make things much more difficult for the Fed, which has to decide whether it should be paying attention to job reports, which show a bad economy, or it should be worried about inflation at a time when we've been worrying about the effects of tariffs. This could very easily be the beginning of the tariff showing up.
Okay, given that that is most likely the case, Barry, explain this to us. The markets barely reacted. Why is that? Because the average person says, I don't know, I'm not seeing all the prices go up. You guys are being alarmist. Look at my 401k. It's soaring.
So without getting into a whole lot of academic jargon, markets are a future discounting mechanism. They don't have a perfect vision as to what's going to happen in the future. Essentially, markets are estimating a variety of different outcomes. And the good news is the president inherited a very robust economy. Corporate America's balance sheets are great. Revenues are good. Profits are at all-time highs. So the worst hasn't yet come to pass. This is kind of the canary in the coal mine. When you have American manufacturers like John Deere saying tariffs can cost us $600 million in 2025, well, either that's going to hit their profits or it's going to make prices go up for farmers and therefore for consumers. This takes a while to work its way through the economy.
But Barr, a canary in a coal mine, one would think, would cause the markets to tank because markets are predicting what's ahead. And if PPI is predicting that inflation is going to worsen, why aren't we seeing markets drop more?
So three reasons. First, I mentioned profits are at record highs. Profits continue to drive things forward. Second, the S&P 500 companies derive 50% of their revenues from around the world. So if the U.S. is dealing with all this tariff mania, look, tariffs are just a consumption tax. Ultimately, consumers pay for it. The rest of the world isn't necessarily importing a lot of goods from the United States, so it's not a problem for them. And then lastly, tax cuts and deregulations are another driving factor to the market. So what the Trump administration has given the market with one hand, they're threatening to take back with the other. And the real question is, people have talked about Taco and other things. I really see the Trump market as a Trump collar. When markets do well, he's emboldened and he puts forward a whole bunch of kind of discredited economic ideas. When markets sell off, well, that's when the taco trade happens. That's when he panics and puts a 90-day pause on things. So here we are at record highs in the markets. The president feels his oats. He's emboldened and he's pushing forward with tariffs.
And potentially investors know if markets tank, he'll do whatever it takes to get them back up. Brooke, new topic. Bloomberg is reporting that the Trump White House is actually considering a stake in Intel. Of course, this comes just days after the White House said NVIDIA and AMD would give the U.S. government 15% of their chip sales to China. What do you make of this? Because yours truly, as a girl who sort of grew up steeped in free markets and capitalism, this doesn't sound like any kind of capitalism I grew up with.
I think we have to call this capitalism with Trump characteristics. It's essentially a form of state capitalism, where the government is now saying, as part of your license to operate, separate from income tax, separate from tariffs, you're going to have to give us some money, basically buy us off in order to do your business. It is a really interesting thing, and we have not seen this in a proper Western democracy in generations, I think possibly ever. And so nobody really knows what this is going to do to the economy. But I think it's a testament to Donald Trump's ability to put people in a position where they have to do something where he gets a victory. I mean, there's another way to do this. They could simply raise taxes on corporations if they want, and do an excess profits tax if they think that NVIDIA or Intel is making too much money. But this has become a very personal thing. In both cases with NVIDIA and Intel, the CEOs went to the White House and sucked up to Trump. And so there's talk then he got something very specific. This is the Trump art of the deal. Whether you think it's a good idea or a bad idea, it's very, very Trump.
It sure is. And the White House is now suggesting, Barry, that deals like this could expand into other industries. What could that do to private business?
So let's call this for exactly what it is. This is a 15% tax on revenue, full stop. I don't know if it's legal if you could say, we're just going to tax these companies and nobody else is going to pay this. Eventually, there's going to be some sort of litigation, some sort of clawback. I would be shocked if any of these companies pay any of this money. You know, the time for the government to take a piece of corporate America is when the government comes in and rides to the rescue. The financial crisis, the government should have said, okay, we'll rescue you guys. We'll lay out all of the bankruptcy reorganization financing like we did with AIG, like we did with so many banks and brokers, but the taxpayer gets a piece of it. That's one example where it almost makes sense to see the government sticking their finger into corporate America's pie. This is just a one-off tax, a 15% tax on revenues, kind of shocking. Corporate tax cuts on the one hand, and again, on the other hand, here's a 15% revenue tax, highly unprecedented in the history of American taxation.
All right, one more topic I want to cover. Big banks used to broadly be anti-crypto. I'm even thinking back a couple of years ago when Jamie Dimon was kind of like, we're going to kind of get involved in crypto, you know, to hedge ourselves, but I don't see it, I don't buy it, it doesn't work for me. Suddenly, the New York Times is reporting that banks are tripping over themselves to get in on the game. Brooke, is this just they are looking at this Trump White House that could not be more Trump friendly, that Trump himself is now making billions in the crypto universe, and they're saying, hate the player, hate the game, I just got to get in on this thing?
I think there's some of that. There's also a really important rule change. There were a bunch of rules in the Biden administration that made it really hard for banks to hold crypto. It basically, they had to hold lots of capital against it. It was unprofitable. As the Trump administration is starting to change that, it is profitable. Whatever you think about Bitcoin, lots of people are putting money into it. And whenever there's a lot of money the banks want in. And, you know, Goldman has been lending against crypto holdings for several years now. And, you know, BlackRock's Bitcoin ETF has $80 billion in it. And they're, of course, collecting fees on every bit of that. They want in. And if the Trump administration is pro-crypto and is going to make it, you know, regulatorily easy for them to do it, they are absolutely going to charge through that door.